Okay, so here's this week's portfolio. I have about 92% in U.S. stocks, 8% in foreign. We have 100% of the portfolios in large cap stocks with 46% value, 33% core, 20% growth stocks. Let's see the sectors split up. We have about half of the S&P's weight in cyclical companies, so it looks like we've taken sort of a risk-off stance where we've maybe transferred a lot of our weight from cyclical companies into defensive companies. And so we're very much underweight on consumer cyclical and financial services companies. As far as the sensitive sectors, for instance, energy and industrials and technology and such, we're pretty much in line with the S&P 500. And you remember from our prior portfolios, we were really heavy energy and technology, but now we've pretty much normalized with the S&P on those, and we've transferred a lot of that weight into consumer defensive, healthcare, and utilities. So let's go down and see how some of the statistics rate against the S&P. So our PE ratio is about 82% of that of the S&P 500. It's about 14 times earnings. So we're purchasing the earnings of these companies for about 82% the price of what we would purchase them if we bought the S&P 500. Our price to book ratio is pretty much on the money for what the S&P 500 is. We're buying the net assets of the companies for about the same price as the S&P. Our return on assets is a little bit higher, about 10% higher than the S&P, so we're getting 9% return on the assets and about 31% return on the equity, and that's about 33% higher than the S&P 500's. Our projected earnings per share growth is about 10% over the next 5 years. That's about 84% of the S&P 500. Our dividend yield has slightly decreased from our last portfolios, but we're still about 42% higher than the S&P 500's dividend yield at 2.76%. And our average market cap is about 89% of that of the S&P 500. So our companies are a little bit smaller than the average one in the S&P 500. So our top 5 holdings would be CVS at about 11%, 10.58%, Kellogg, Dominion Energy, Medtronic, and Microsoft Corp. So we've got a lot of defensive, consumer defensive companies here, and energy, and some healthcare and technology.